And for more on Alibaba, its stock price and its results, our New York reporter Karina Huber has been following the stock since its IPO and joins us live. Karina.
Well, that's right. Let's talk about the stock price. Year to date, Alibaba shares are down 17%. And since the beginning of trading back in September, they're down roughly 8%. Meanwhile, the three major indices here in the U.S., the Nasdaq, the S&P 500, and the Dow Industrials are all up over both of those time periods. Now, experts say it's not uncommon to see a stock tumble after it goes public, and Alibaba may soon bounce back like another heavily hyped listing, Facebook. When shares of Alibaba began trading on the New York Stock Exchange last September, investors were scrambling to buy into what became the world's largest initial public offering. Those lucky enough to buy Alibaba shares before they started trading, mainly institutional investors like banks and pension funds, made money. The rest didn't.
Anyone who has purchased shares in Alibaba after the first day of trading has been underwater. And a very similar thing happened to Facebook.
Facebook was also a heavily hyped listing that soon lost more than half of its value. About a year after going public, it bounced back. And now it's up more than 160% since its IPO. Kathleen Smith, a manager of IPO-focused exchange-traded funds that include Alibaba, says it's not uncommon for shares to sell off post-IPO.
I'm not saying that Alibaba will turn out to be trading like Facebook, but there's no reason to think that just because the stock has declined that it's not a good company, and investors are just trying to figure out what the company's worth.
Worries about growth and consumer spending in China, the impact of regulation against counterfeit goods being sold on Alibaba, and a hiring freeze at the company have caused jitters among investors. While investors are shying away from Alibaba's stock right now, some analysts and investors believe it's oversold and think Alibaba still has potential for growth, which could make it a winning stock down the road.
We are not in agreement with the naysayers who suggest that the growth story is peaked and that the valuation is excessive.
Alibaba peaked over $119 a share in November last year and then sank. It's been trading in the $80 to $85 range over the past week. Scott Kessler at S&P Capital IQ has a strong buy rating on Alibaba and believes the stock will rebound, hitting $116 a share within the next 12 months.
Alibaba hasn't even scratched the surface of opportunities outside China, and so we think that's kind of an option, if you will, on opportunities that people may not be factoring into the overall growth story.
Now, Alibaba has made no secret of the fact that it is eyeing markets outside of China. Its goal is reportedly to get 50% of its revenue from outside of the country, and it's opened an office here in Silicon Valley to help with that goal. Michelle?
All right. Thanks as always, Karina Huber.